Welcome to the Builder's Risk Outlook. Entering 2024, we see a continuation of the residential construction trends experienced over the past 18 months. High demand and low inventory, coupled with mortgage rates that just kept climbing, contributed to some uncertainty in the single-family market. However, we may have a new cause for optimism. The Federal Reserve is signaling potential interest rate reductions to come, adding to the intrigue as we enter what will be an interesting election year. Based on its most recent meeting, the Fed is forecasting 3 rate cuts in 2024 at 25 basis points each. This pivot comes on the heels of 3 meetings in a row with no rate change or any signal of potential change. While this is great news, some anticipate even more loosening, with current consensus projections set for a minimum of 6 reductions at 25 basis points each. Conventional thought is that the Fed tends to lag behind due to its heavy reliance on economic data that takes time to evaluate. Many feel that as the data continues to show improvement, the Fed will move faster to reduce rates, similar to what we saw in the delayed reaction to inflation, which led to the recent string of rate increases. This downward shift in interest rates would have a major impact on affordability, and we should see the pipeline of first-time home buyers, primarily made up of millennials and Gen Zers, aggressively pursue homeownership. We also anticipate that current homeowners who previously avoid purchasing new homes due to higher rates will consider it as the market becomes more attractive. With an estimated deficit of 3 million homes in the U.S., lower rates should improve builder confidence and help jumpstart their role in overcoming that deficit. Multifamily construction continues to be an area of cautious optimism. We expect to see slowing here for the first 4 to 6 months of 2024 as nearly 1 million units come online. These were delayed primarily due to supply chain issues coming out of the pandemic. As multifamily buildings become occupied and rental rates begin to normalize, we do expect to see more activity in this segment in the latter part of 2024. As demographic shifts continue, we expect to see some surge in non-residential construction to keep up with growing populations in parts of the country. The largest expenditure increases are expected to be around public safety, power generation, and education. We should also continue to see an increase in manufacturing as more dollars are dedicated to electric vehicles and the much needed battery supplies. 2024 will be another period of steady growth in all aspects of new construction, which also means more new business opportunities for you in personal and commercial lines. Because of our strong stability and continued underwriting capacity, we look forward to partnering with you in 2024. See you next time.